And Sue, sources say the goal would be to replace some of the high-interest debt loaded onto Twitter during the buyout.
Yeah, the $44 billion buyout, it was a big drama that played out for months. It closed in October, and it put about $13 billion of debt on Twitter. The talk of margin loans that we're being told bankers are discussing is just one of several options being considered to ease the debt load. We're told that the interest on these loans is about $1.2 billion a year for Twitter. And in many of the reporting that Bloomberg has done, we've reported the extreme cuts to staff, the extreme other cost cutting, the fact that revenue is lower because of advertising and questions about advertisers pulling back and due to the uncertainty at Twitter. All of this putting Twitter on a daily loss to the tune of billions, according to Musk. So that heavy interest payment certainly a concern. The banks, meanwhile, have been forced to fund the entire debt package because of the deterioration in the credit market and the difficulty in selling it. And there's been a lot of focus on Tesla stock. Initially, if you may recall, the initial Twitter financing package included $12.5 billion in margin loan commitments that would have been backed by Tesla stock, but that was ultimately replaced by additional equity commitments, including investors from several different partners. So again, Twitter stock could once again be in focus here, but our sources tell us this is a preliminary discussion between the bankers. There have been no decisions, and one of the areas of focus is $3 billion of unsecured debt that has been placed on Twitter that has an interest rate of 11.75%. That's an ouch. So the goal is to ease that burden through a number of options we're told are now being discussed, and this comes from people close to the financing discussions. Back to you.